at the current juncture, given the kind of global backdrop we are in, what should investors do?
No, I think investors are a little wary about the equity assets in general, and rightfully so, because there is a fair bit of volatility not only in the prices because of money flow but because of earnings as well. So people have extremely low visibility on the earnings side, which is the reason why there is a little bit of wariness. But having said that, I think this is probably the best juncture to start accumulating assets and not go overboard, but continuously accumulate assets with a view over the next 12 to 18 months.
Jump in on this argument that in the month of June and early part of July, markets have appreciated because of hope trade. As of now, markets are hoping that something will change from New Delhi, global uncertainty will die down, and because of drop in commodity prices, inflation will also settle.
I think these kind of intermittent rallies are to be expected because you will see over pessimism and a little bit of optimism coming in. But structurally, what we need to understand is that global money flows are very thin, and the second thing is corporate earnings are likely to be flat at best, if not a little more sluggish. So consequently, that doesn't make a great situation for a market rally, sustainable market rally. So earnings surprises are not going to be on the positive side. If at all, it will be on the negative side. And the money flow situation being a little weak, you will see these pullbacks as well taking place from time to time.
Satish, if I look at your current declared portfolio, you have exposure to ITC, a very strong, a large exposure to State Bank of India, and a decent exposure to ONGC. I guess the bottom line here, Satish, is that you expect that PSU stocks to make a comeback.
I think PSU stocks have been beaten quite significantly because of the regulatory issues and government issues. Having said that, they have fairly decent franchises available at very attractive valuations. So that's the reason why we have built up our position on PSU stocks as an alternative to some of the higher valued stocks.
Satish, what about the overall policy picture, and can we expect some pickup in policy moves anytime soon?
I think it's a little too early to be optimistic on policy front. Yes, we are going to have a change in the finance minister, but as to whether one person alone can move the entire government machinery to kind of roll back on whatever has happened is a bit too optimistic. So therefore, I think we need to wait and watch and see as it goes along. Having said that, state governments are implementing infrastructure projects. It's a government, state level initiatives are also important to note. And we need to be very specific as to which states are progressing and which states are not. Economic backdrop of slowdown due to the central policies.
Satish, your exposure to ITC has worked like a charm for you. You have a 4.6% exposure to ITC. ITC currently, as we speak, is marching towards a new all-time high. So this is one position, the defensive position, which has worked for you. Do you think this position may not work for you in the future?
I think we need to take cognizance of the fact that it has outperformed significantly during this rally, and typically stocks that have outperformed so handsomely will need to consolidate before the next leg of performance sets in. So, and valuations are little more demanding than ever before. So therefore, I think ITC may consolidate at these levels or even pull back a little bit before the next rally starts.
If I look at your current exposure to financials, it's about 18%, which is slightly below the Sensex weightage and the Nifty weightage. What makes you marginally underweight on financials?
Financials, as we have spoken earlier, we are concerned about corporate stress impacting the profitability of financials, especially some of the large PSU banks. And we think that the provisioning cost, which has been at all-time low, will actually start increasing over the next few quarters. And that would impact the bottom line, and therefore we are a little more cautious on financials.
What about spectrum pricing, Satish? How would you approach the telecom space now, and would it be a wait and watch approach that you would adopt, given the kind of news flow that we've seen, which is still pretty much developing?
On the telecom side, clearly there are regulatory issues which are acting as an overhang, but the fundamentals of the business are still very clear that it's a penetration game, it's a small ticket size game, it's a fairly profitable business once you achieve critical mass. And if you look at the core of the business, I think we like that business. Leave aside the regulatory aspects which can change quite dramatically either in favor or against the business. So we also understand that the government is having a rethink on its earlier policies. There's been a fair bit of international pressure because of the the international players who have been impacted due to the telecom policy. So we'll need to wait and watch on the regulatory side before we can make a comment on that.
Satish, several infra names are also making a comeback in your portfolios, and your exposure to pharma now seems to be reducing. Are you now of the view that it's time to play the reverse trade, which is to get out of pharma, which is expensive, get out of FMCG, which is expensive and is pricing in a lot of good news, and revisit infra names which are beaten down?
I think a gradual change in positioning may be required, considering the fact that these stocks are overvalued. So FMCG and pharma, which were the pain trades, if you will, have played out to a large extent, and we need to therefore look at infra names. But we have to look at infra names not as a substitute for pharma or FMCG, but on their own merit, and look at the segments that they operate in and the sub-segments that they operate in before we decide whether to include or not in our portfolio.
Are you still hot on Kane India? Last time I remember when we interacted with you, that was your big contra call.
I think Kane India will be impacted by international oil prices, but that apart, it is something which is still fairly exciting to us because of its cash flows and the fact that it can do a fair degree of diversification stroke a payback of cash considering the exploration reserves that it has.
But why are you so hot on E&P companies? Because you have exposure to Kane and you also have exposure to ONGC at a time when China is slowing down, global growth is back, crude prices have collapsed. You are holding on to Kane India and ONGC.
In terms of Kane India, we have reduced our exposure. I don't know which portfolio you're referring to, but we have definitely reduced our exposure to Kane India. And we have also looked at ONGC more as a defensive, because it's anyway not getting $100 as its oil remuneration. It's getting far less. It's probably getting $55 to $56. So in that situation, as a core defensive, ONGC finds a place there. Not because of oil, but because of its intrinsic valuations.
Satish, is it time to go underweight on consumer stocks, considering the slowdown in discretionary spend?
I think the slowdown will definitely pass on there as well. We are seeing some early signs of slowdown in the consumption space as well. The valuations are rich, and on a selective basis, we would be looking to trim the positions in the FMCG space, because it is something where expectations are high and valuations are high as well.
Satish, now Sundaram Mutual Fund, as a house, you take a lot of pride in your mid-cap portfolio, and some of your top mid-cap holdings in the Sundaram Select Mid-Cap Fund are Ipca Labs, FAG Bearings and Bosch Limited, which means you're extremely bullish on engineering ancillary and auto ancillary. What makes you bullish on engineering ancillary and auto ancillary?
I think the currency depreciation is going to work in India's favor. Slowly we will see these companies becoming much more export oriented than they have in the past. That aside, the domestic auto demand story may go through a lull for a time being, but I think we still have a long way in terms of auto demand growth. And FAG and Bosch are plays on the auto demand story, and we are playing that through this talks.
The other interesting exposure in your mid-cap fund is in names like Rallis, Chambal, essentially the fertilizer and the chemical space. Now that's a big contra bet because some of these companies like Chambal are still dominated by policy framework and are still dominated by a regulatory environment.
I think some of them are built on hope. Rallis, however, is an agri-chemical company which is doing very well. It's got new products, it's got a very good distribution force, and it's got a pan-India presence. And Rallis is a play on the fact that there is a labor shortage in the country, and there's going to be increased use of pesticides and herbicides to increase crop output. So it's a play on that, and Chambal is a play on policy, as you rightly put it, but that's a little bit of a hope, really.
Satish, what is it that you like and dislike out of the IT space? Because days from now, and we would be focusing on both Infi as well as TCS's earnings.
On the IT space, what we are noticing is that large companies are finding it increasingly difficult to grow, whereas smaller companies are actually picking up small projects and are able to grow faster at this juncture. But that does not mean that that is a sustainable business model. We need the larger companies to grow for the smaller companies to grow. We don't see that coming through clearly at this moment because the BFSI space, which is the largest contributor to business, is actually kind of slowing down its IT spend, and therefore it will remain challenging for IT companies to grow at the levels that they have shown in the past.
So Satish, final question. As Sundaram Mutual Fund, what is your big contra bet? Where are you allocating disproportionate amount of money? What are your high risk return ideas?
I think on a contra bet basis, we are still too early to take contra bets per se. We are taking some kind of bets on cement companies as a contra bet, in the sense that the valuations are very low in some of the mid-cap cement companies, and that's probably as contra as we are getting as of now. But we are still not in the go-go years for us to take completely deviant bets, and we would be more cautious and prudent rather than brave at this point in time.